What up, what up? Just make sure everything is good. Okay, just gotta share this link. Alright. What up, what up? Let's get started. Just gonna take a look at the market, see where we could head towards, things to look out for the week. I always like to start at the daily, at the higher time frames. So we're looking at the weekly, going down to daily, hourly, 5, 15. So first off, you can see we came into this imbalance right here on the weekly, and we just bounced off of that. That's the first thing you want to notice, and we're still trending to the upside. You can see there's all these gaps that needs to be filled here, but it doesn't mean that it's going to go and fill all these gaps just because we have it, at least not right now, right? Now you can go to the lower time frame, and you can kind of say pretty much if we hold above 2780s, the market's still considered bullish on the higher time frame. Like, we're not going to get bear market unless we can get under this right here. So now let's go to daily. You can see there's some confluence here, there's some daily imbalances here along with that giant weekly imbalance that we saw. So typically this creates a nice support, you know, a nice place where we're supposed to stay above. So that means unless we break this level, we should be heading higher, right? And if you think about this clearly, right, this is what I want you guys to understand. If we break below this level, then we want to play towards this level, and that's how you want to think. So then you want to understand that you just need to get a piece of the move somewhere in between here if we break below this. So you wait for a pullback, so you wait for something like this, right? And then you play into this right here. So then you will have your short here, you will have a stop right here, and then your take profit will be somewhere around there. So you just need a piece of this move. You don't need the full move, you know, because again, as long as the market stays above 27,000, we're going to be going up higher. You can't tell when the market's going to bounce. The market can bounce here, the market can bounce down here. You don't know, but this is a discount. This is a discount area for the market to play the longs as long as 27,000 holds. Now, if 27,000 breaks, then that's where your stop should be when you're playing these discounts. So if you're going long here or long here, you want to use this as a stop loss, because that's to protect yourself. Because if we break these stops, then you can kind of see that there's all these levels down here that we need to go and fill, right? So there's all these gaps, right? All these gaps that we need to go and test, and we want to make sure if we were to take along this discount rate, then we want to protect ourselves before it goes down to those 450s, you know, 24,700s areas, and that's about like a 4,000 point drop. I'll let you do the math on 1 micro. That's about $8,000. So, all right, now taking a look at this already, we know that the market's still bullish, right, on the higher time frame. And you can kind of see that we actually fill this gap right here. So we fill this gap here, and we're kind of just hanging out here. And if you're a big fib retracement guy, you can kind of see we're kind of in the golden pocket too, right, of this move. So we're kind of just been hanging out in this golden pocket. You can't say it's bearish until we break this low right here at 28,278. So until then, you're kind of just playing with the chop, and considering that we're still going to go higher. That's what I would consider this as. And you can kind of see also we create a nice imbalance right here for the bulls. This could be an imbalance for us to have a CISD, you know, to go sweep the low to head towards down here. This also is a nice little manipulation zone that we created right here. So you can kind of see this higher low. I call this a manipulation zone because as long as we hold above 278, this all right here is all discount. So if you take a look at this, let's say you take a long here, you can have a discounted play all the way up to the high for the one, if this is like your type of trading, a swing trade, right? But you can bring this into a smaller time frame and use this on a smaller time frame too, because the market's fractal. So once you see on the daily time frame, you can implement it into like a 5 minute, a 1 minute, you know, a 15 minute. But so far, from what I'm seeing, the market's pretty bullish. We get a nice little bull flag here, right? So see what happens. You can call this falling wedge, bull flag, whatever, but it's a continuation pattern to the upside. The big reason why I believe that we are supposed to go higher is because we swept this high right here, right? Sweeping this high, pulling back into you know, what the imbalances are, is usually a sign that we're supposed to go higher. The only thing that will make me change my mind is if we go and maybe break this low right here at 900, but even then that's a manipulation, so technically the 900 break is still considered too early to judge the market that wants to go lower, but it could be an early signal that the market can be heading lower on the higher time frame. The biggest one, like I told you guys, is the 28,278 level. That 28,278 should be like your golden level right now, because this level tells you exactly where the market needs to be going towards. Above it, we're going up higher. Below it, we're going to go down to 27,000 and then maybe lower. All right, now let's go into the smaller time frames. Let's take a look at like let's take a look at the 1 hour. 1 hour is a really good indicator when it comes to, you know, seeing where the market's headed on the daily, like intraday, and then you can find a little trade in between there. All right, so biggest thing is you have a few, you know, lower highs that is going on here. If we break this 30,086, we're definitely heading towards 30,300. We could definitely manipulate there and go lower from there. So you got a nice little manipulation zone, and if we don't manipulate here and we get a nice pump, then we're just going to go past all-time highs and just get a full extension, you know, to continue pushing up in the bullish market that we're in. If I'm looking for longs here, what I want to see is I want to see if we can pull back into these areas. You know, I want to see a pullback here after the sweep or before the sweep. So if I get this pullback to this area before the sweep, right, then I'm targeting something like this. You know, first take profit here, and then you can take profit here because there's a nice little order block right there. So then you would take profit right there. I like to take it, I don't like to get the full extension into it. I like to just take it there. So I would take profit here at this 86 to protect myself, and I would let the rest run up to 30,250s. All right. So that's a potential play. Now technically, what I like to do is, once I know the direction, I want to go to the lower time frame to find a sniper entry. So as it's moving up, You know, I want to look, can I find anything on the lower time frame that might give me some confidence to play a stronger trend, a stronger push up, you know. And you kind of see we did bounce off at this level a few times. We have a nice manipulation area right here off of these equal lows. We're messing with these equal highs right now, right? So there's a chance that we can sweep down and then push up, right? Because we already sweep the stops up here on this one. So I wouldn't be surprised if it comes down, sweeps these lows, and then push up. And then if I am looking at this correctly, I want to play the stops right here at 29.96. So what I would do is, if I was to take a long here, I can use the stops at 29.96, and I can target that high right there for my first target, and that's 2-to-1, really nice. And majority of the time, if I get 2-to-1 off of this trade and I'm scalping this on one of my accounts, that account's done. Because if I risk 300, I make 600, I'm good. I'm set for the day for that account. I don't need to make any more. That's it. And technically, this is kind of how you want to do it. So there's two potential plays right there that you kind of run off of, you know. And the sweep might even go all the way down here, so you never know. But there's nothing wrong with taking profit on the scalp, guys. I don't know who made that up. Like, oh, but you got to get the whole move. But you guys got to get away from that, because the market's about, you know, getting in and getting yours and staying out of it. Because every time you're in the market, the more time you're in there, the more risk you put on, you know, versus, you know, getting yours and getting out, being able to size. Like someone who's playing this big play, they might have to size with like 2-3 micros, versus someone who plays this small play right here, they might have to size with only, I mean, they can size with like 7 micros. So then they're getting the same experience as the person who's trading over here, just on a faster time frame. You know, that's all it is. And you have to accept the loss regardless. If you take this play with this play, whatever happens, you just have to learn how to accept it. It's a business expense, okay? Your losses are a business expense. And when it comes to business, you're gonna have some expenses. It's like inventory, right? You gotta buy inventory before you can sell it. You lose on the inventory that you can't sell, right? Just think about it like that. Every time you enter into a trade, that's a business expense. You should be ready to lose whatever you put in right away. So me personally, I am willing to lose $300 per account right away. And if it's a loss, it's a loss. So that's a little psychology lesson for you guys right there. All right. But technically, yeah, what I'm seeing this week is that we should be going higher, 3,300. And then if we get like a manipulation back down, then we could just hang out and just be stuck in this range from, you know, 29,150 to 30,500, you know, 600. So we can be stuck in this range, or we can push up and get a nice distribution to the upside here. So, all right, thanks for joining, guys. Hopefully you learned a thing or two, and catch you guys next